أعوذ بالله من الشيطان الرجيم بسم الله الرحمن الرحيم الحمد لله رب العالمين والصلاة والسلام على رسول الله وعلى آله وأصحابه أجمعين. Assalamu alaikum wa rahmatullahi wa barakatuh, dear brothers and sisters, and welcome to the final episode of Ramadan Real Talk for 2023. I thank you very much for joining us. Those of you who are aware that tonight is the 27th night, inshallah, for many of our brothers and sisters. So I'm very, very unlikely to have been joined by any of you. You've all probably got, would say better things to do, as I'm sure we'd all agree. Not to take anything away from today's episode, but the 27th is a huge night. So we ask Allah to give you tawfiq if you were doing the 27th and are watching this after the fact. For the rest of the brothers and sisters that are tuning in today, hope everything went well for you yesterday and that you were able to get the most out of Ramadan more generally. Thank you so much for your company throughout this month and today as well, especially if you're watching after the fact. We know that in this time of Ramadan, the live audience is unlikely to be that large, and that's fine. A lot of people love watching this after the fact, and we get some great comments and feedback on the show that way. So wherever you're watching, whenever you're watching, inshallah, you find this a very, very productive and interesting episode. It is a continuation of a previous conversation that we had on Islamic finance, and it is the topic to close out this year's series. It's been a fantastic series of episodes this year, some very, very good discussions on a range of important issues affecting the community. But before we dive into tonight's episode, I just want to do two things. Firstly, we'll play a little bit of a video that links to the work that NZF is doing. But before we do that, I just want to remind everyone who's watching that your zakah and sadaqah in these last remaining nights, especially if it's the 27th and you are watching, then these are prime nights for your zakah and sadaqah to be paid. If you have not yet paid your zakah for this Ramadan, if your hawl falls within Ramadan, then do consider NZF as a destination for at least some of your zakah. NZF is doing amazing work in the community to help people who are going through incredible difficulty and challenges right here in our community. And when it comes to sadaqah, your sadaqah can power the operations of NZF and the work that it does to enable the potential of zakat to be reached in this particular in our particular Muslim community in Australia. So whatever the case, make sure you give generously, you dig deep, and you assist in NZF's mission to really help create a self-sustaining Australian Muslim community where every single Muslim is looked after and no Muslim is left on their own. Now, one such area in which NZF does amazing work is really an area where, if it wasn't for organizations like NZF, we really would be at the mercy of government and non-Muslim institutions, some of which aren't always culturally in tune with the needs of Muslims, and that is drug and alcohol rehabilitation in this particular instance. So we're going to play a video for you, which sort of brings to life a little bit of the work that NZF does in this space, and it is reasons like this why we should all be donating a little bit of our zakah and sadaqah this Ramadan, if not a lot of it, to NZF. Team, can you please take
Drugs and alcohol is such a big problem in the community. I have seen so many brothers and sisters struggling with drugs and alcohol on a daily basis, and it's something that isn't being spoken about enough. Oftentimes we're seeing most of these brothers and sisters feeling as though they're not being heard, feeling as though they're suffering through silence, suffering through their fears, suffering through their anxieties and vulnerabilities. In one case, I saw a brother who was homeless, who was still struggling with drug and alcohol addiction, who had no family or friends to be able to help him on his journey of recovery. And through this, NZF was able to utilize a holistic approach by providing him with financial supports, providing him with temporary accommodation, and providing him with supports in the community, such as halakha programs. And for me, this is important because we're not taking the addiction as the underlying problem, we're utilizing the wholeness of that person in order for him to engage in a successful journey of recovery. He was then referred to me for mandatory drug and alcohol rehabilitation services, and from therapy, we were able to investigate certain things that was able to allow him to bounce back, like finding a job, like connecting him to community, connecting him to the masajid, connecting him to brothers who really care about him, connecting him back to family who really want him to be a part of that family again. NZF have a wide variety of programs that are able to meet the needs of each person in the community. They're able to connect you to a mosque, they're able to connect you to a halakha program, they're able to connect you to professional help such as a psychologist or an occupational therapist. And through their years of networking with the community, they're able to provide the right supports for each person.
There you go, subhanAllah. So this is, it's videos like this that really bring to life what NZF is capable of doing in spaces where really Muslims would be forgotten if it wasn't for its excellent work. So please do give generously, brothers and sisters, in sadaqah if you've already given your zakah, and in a good portion of your zakah if not, if you haven't already dispensed with that, inshallah. So khair, without further ado, let's get right into it, inshallah. I'd like to introduce our guests for today, who will introduce themselves, but a formal salam to our brother Hadi. Brother Hadi, assalamu alaikum wa rahmatullah, and our brother Mohammed. Wonderful to have both of you here. Welcome to Sydney, Brother Mohammed. Joined us here from Melbourne, and Brother Hadi is very, very well known to many people in the community as a bit of a glue that holds together the financing needs of the community. Your name pops up very, very regularly, mashallah, brother. But let's let you tell us about yourselves and your careers and how you find yourself here talking about Islamic finance. Brother Mohammed might start with you, inshallah. Tell us a little bit about who you are and what brings you here.
Yeah, my name is Mohammed Najjar. I've been at MCCA since 1989, and I've been through.
It's the year I was born, by the way. Just
yeah. I've been in different positions since the start, and my background is mainly electrical engineering, and I've done postgraduate course in IT from RMIT. Then I've done diploma in mortgage broking and diploma in financial planning, plus some few management courses. But this is my background. My main one is IT and electrical engineering.
So you were working in IT and so forth before you joined MCCA?
No, before that I was in electrical engineering, not in IT.
Yes,
so the IT is new in reality.
Yes.
The time that I joined MCCA in the 90s, late 90s, used to be funds under management about 24 million at that time. And alhamdulillah, now we have done finance nearly 2.5 million, above 2.5 million. Sorry, billion.
MashaAllah.
And currently in the book about 1.3 billion under management. So that's in general. So.
MashaAllah, wonderful. And so you've become an Islamic finance practitioner, an expert, basically through that work?
Yeah, as well. I went to the Sharia side. I've learned dealing with the shuyukh with Dr. Ibrahim Mohammed, and even previously with Dr. Mohammed Dawood Bakar to learn about the details and the challenges usually with the Sharia. And I used to sit as well with our Sharia advisors and the lawyers when we start the products. Even though when I started at MCCA, the previous products were already there. And Dr. Ibrahim Mohammed was in reality our Sharia advisor at that time. Yeah, but I used to ask and challenge Dr. Ibrahim and even as well Dr. Dawood on some few things as well within the products. And that's where we took the organization.
Brother Hadi, what about yourself?
Look, I will say probably in general, my interest in Islamic finance actually started from my university days when I was doing my first degree, which was Bachelor of Commerce. You know, obviously with a lot of brothers also at the same time doing their commerce degree, doing their accounting degree. I think the common question that people have, when we graduate, and we get into the real world, we're going to be stuck dealing with riba at certain different levels. So that was like really, I think that was a main concern for a lot of brothers, that were doing the sort of same degree as myself. When we leave here, how we're going to deal with this issue, and that's what really started my interest in Islamic finance, and my research into Islamic finance from my university days. Alhamdulillah, I had the opportunity to join MCCA. I've got over 20 years experience in Islamic finance industry. I not only run the branch in New South Wales, I'm in charge of the New South Wales and also ACT territories. And also as part of my role, I also need to deal with different community organizations, different community leaders, different shuyukh, trying to balance out what's the needs of the community and what we can do to help them, inshallah, alhamdulillah. So I'm involved in from that point of view. Also, as responsible manager for our Australian credit license and Australian financial services license. From that point of view, I'm involved in the audit committee that will deal with EY, KPMG, and also just with Brother Mohammed Najjar involved in the product development side. So being involved in introducing a lot of new products. So which involves dealing not just with our local Sharia board and advisors, but also dealing with our international Sharia boards, such as Dr. Dawood Barker and so forth, which Brother Mohammed has also mentioned, and also being part of the audit committee. So we pay we've been able to expand our roles and also dealing with these shuyukh. We need to get heavily involved with our lawyers also, because we got dual compliance. We have to deal with the strain regulations and also making sure our products are Sharia compliant. So we're involved dealing with Gaydens, Kingwood Medicines, one of these leading law firms, and so forth like that. So my role at MCCA, carries many hats, and so forth, and that, and obviously, you have to have the qualifications also to be there. So obviously, like, I've done my first degree Bachelor of Commerce, I've done my Masters of Accounting, I'm also a CPA, and so forth. So that's my background, that's my role at MCCA, and to be quite honest with you, like I said, my interest in Islamic finance really started from my university days.
So it's been in the field quite a while. So a lot of experience, I guess, in the room, brothers. I'll start with you, Brother Mohammed, and Brother Hadi, get your thoughts on this question as well. Where do you see the sector at the moment, the Islamic finance sector? How mature do you think it is? Where is it in its life cycle? You've seen it develop over time. What would you say right now? What is the health of the industry?
Okay. Look, I think it's gone a long way. Like, if we really, before we even talk now, let's step back just to 1989 when MCCA first started. We were the first Islamic finance entity out there in 1989, where we started with just 10 shareholders and just only $20,000 in capital. Whereas Brother Mohammed Najjar mentioned, we've done now, coming 34 years later, about $2.5 billion worth of finance. Okay, so we've grown a long way. We've seen a lot of changes in that time frame. We considered the pioneers of Islamic finance and investments. We can see the industry has grown quite a lot, especially in the last 5 years. There's a lot more people and organizations popping up that also offer Islamic finance. So we're happy to be leading that way and giving the opportunity to others. Alhamdulillah, if you're going to say but even though there is a lot of growth and a lot of other institutions that are coming, there's also a lot of challenges there too, I would say, because what happens is, you see, especially from the regulators, we've got like a lot of restrictions. Like when it comes to product development, there's a lot of restrictions you'll see from the federal level with the NCCP, the taxation laws, because obviously how the transactions must be done as a trade contract, from state level. With the double stamp duty issues, land tax, Residential Tenancy Act, and so forth like that. So we are working with regulators. We have to. It's a working process. We have to work with them. We've had some successes, like alhamdulillah, I will say MCCA was successful in being the first Islamic organization to approach a state government, which was the Victorian state government, where in 2004 we were able to get the Stamp Duties Act, or the Duties Act, amended to allow exemptions on double stamp duties. So we're very proud of that fact. But what if you want to look at it realistically, I think what we all look at is the best model when it comes to Islamic finance in Western countries is actually the UK. The UK actually has the best model that I think entities in Australia, the US, and parts of Europe will look towards. They were able, under the Finance Act, they were able to get some amendments in their regulations, which they labeled under alternative finance. But if you were to look under that act of that subsection of alternative finance, what actually happened is you'll see that they're using the Islamic terms, murabaha, mudaraba, and so forth. Obviously they just use the word alternative finance, but it's actually all catered for Islamic finance. So when they were able to customize the regulations, so there's no double taxations and other duties and so forth, and that, the UK government was very, very smart. They are able to bring in billions of dollars of investments every year into the UK. And really, they are the model that everybody in the West should be looking towards as achieving the same goal.
Right.
But obviously, they were able to do this because not only they're able to attract investors overseas, but also they have over 6 million Muslims living in the UK. So that's a big market. That's another challenge for us in Australia, where the Muslim population really isn't that large. Or only 800,000, even say $1 million, a million Muslims, if you want to round it off. Okay, and out of that million people, how many Muslims are actually committed to wanting Islamic finance too? You know, there is a large majority of Muslims that wouldn't care whether they go to the bank or not. You know, they don't see, and that's part of the education process. They don't take the issue of riba seriously. You know, they think it's a casual thing. So these are so obviously having the larger population and the larger demand does help you in pushing these regulation changes, which the UK was able to achieve. So obviously we have some good achievements, and we've grown quite a lot, you know, over this time period. And it is a growing industry in Australia, but there is still a lot to go if we want to reach the standards of others.
If I can add just another thing, like initially when we had the Murabaha and the Musharaka at that time, till 2004, people used to pay stamp duty twice. In the beginning, when they buy their houses and when they finish, unfortunately. So then the exemption came in 2004, and we approached other state revenue offices in other states. We have came with another exemptions, but not like as the one in Victoria, but it resolved the issue. And then we start coming with the new products, which is Ijara Muntaha Tamlik, to resolve that kind of issue initially.
Your thoughts on that question, Brother Mohammed, as having seen 3 decades of this now, what's been the the evolution or trajectory of the industry at large?
The big change, as I mentioned, like moving from the typical traditional Musharaka and Murabaha towards Ijara Muntaha Tamlik, and the rationale that we had initially when we start looking to introduce a new product. Initially, we had the Murabaha at that time, where when we looked how we're going to go to the market, where we didn't have investors to come up with this kind of demand, or if we want to go to the banks, assume, or non-banking funders to fund them. So the Murabaha was the wrong model, which is very hard that you're going to get a funder or a bank to accept to commit to 30 years fixed rate. And the rationale in Murabaha, you have to know exactly what would be the selling price. And the same thing for the Musharaka. So the issue with the Musharaka, even though it accepts the variability in Musharaka Mutanaqisa, the only thing that sharing with the profit and loss. And again, there is no funder will accept sharing a profit and loss in that sense. And unfortunately, the history of MCCA, I remember one contract that the client shared the profit, which is maybe it was $1,000, and the rest they refused to share the thing, but they are happy to share with the losses. And a lot of people, what they used to do in the Musharaka Mutanaqisa, if the property is going up and they need to break the contract before the 15 years, what they used to do, they used to come and refinance to the bank, while the intention was to sell the house. So they know that in the contract, if they sell the house, they need to share with us the profit. So what they used to do, they come and refinance at cost, go to the bank and immediately put the property for sale. Just to let MCCA not to share that profit. Then at that time we decided, then what's the point of that Musharaka Mutanaqisa, only sharing in the lost side. And legally it was an issue also. So you cannot force the people to share legally their profit. It is okay for any financial institution to share the loss, as long who is advantaged is the customer, but not to force on them. So that's where we moved from the Musharaka Mutanaqisa and the Murabaha to the Ijara Muntaha Tamlik.
Yes. And we'll break this terms down for everyone listening.
Exactly.
Very interesting. Okay, so that's some interesting thoughts. Now, when we use the word Islamic finance, when we're using the phrase Islamic finance, in most people's minds it will be the end user financing, right? The home finance component. Tell us a little bit about Islamic finance more generally. Like, as in, is there a more general understanding of it? Is commercial finance involved? Loans to businesses and stuff, or really is MCCA in the business of looking after home financing needs of individual Muslim customers, for example?
No, look. There is different type of. Firstly, in general, there is many different type of financial contracts or Islamic finance products. As long as everything is done as a trade, you buy, you sell, you buy, you lease, and so forth. MCCA, we do provide a range of products, not just for residential. We also allow people to buy commercial products. We do property development also, and so forth. So we do got a big range of products, and also, you know, we cater to people's different needs and so forth. For the people that are self-employed, people that are pay as you go. Is there a difference in the contracts? Like, for example, when we're doing our current Ijara product, okay, no, we will use this. There isn't really, we will stick to the Ijara product because, as Brother Mohammed was saying, we find that's the best product that suits this Australian market, where it allows us to be Sharia compliant and can also is flexible with the Australian market. Okay, so if you're using our Ijara product to buy $1 million residential property or using it to buy a $20 million commercial property, we'll use the same agreement. It doesn't matter, you know, what the value of the property is. We use the same process. Yep. So yeah, but we do have a range of products, like I said, from residential to commercial, they cater for everybody's needs, inshallah.
Yeah. Any thoughts on that one?
For other Islamic banks in general, I mean, or Islamic financial institutions outside Australia, obviously they offer other transactions which is not only linked to property. Yeah. So there is, for example, for a business, they go in musharaka in the business, which is not linked to property. And as well, they go in tawarruq, they go in mudaraba as well, with different transactions. People would like to import goods from overseas and so on letter of credit and so on. So there is so many other transactions. With MCCA, we are sticked only to for the income fund with our license, mainly property.
So we're going to get into some quite meaty questions, I suppose, in terms of how Islamic finance works and some of the controversies that are associated with that and some of the doubts and questions that people have to the point of today's episode. But before we do that, I think it's worth just getting a quick sort of perspective from both of you, given that we are Muslims talking about this and that, you know, you're very much an Islamic financial institution that's trying to provide something of an Islamic alternative in the space. Tell us about how you think Muslims ought to view the whole concept of wealth. Generally, right? How does, you know, why should a Muslim not just go to a conventional banking organization? Why is there a room for someone like MCCA? What's driving that? What's the worldview part of it that brings organizations like MCCA to exist in the first place? How would you sort of answer that, Mohammed?
Would you mind if I jump in?
Yeah.
Look, you talked about, like, I think sorry, it was a long question, but one of the things you asked is, okay, what's the importance of wealth in our deen? Okay, I think before we even address that question, we need to talk about priorities. Okay, what's the first priority? First priority is, what is our relationship with Allah subhanahu wa ta'ala? Okay, so you know, so it doesn't matter, you can be a multi-millionaire, but if you have no relationship with Allah subhanahu wa ta'ala, no deen, then to be honest with you, your akhirah is gone. What's the use of achieving all this wealth in this dunya when you're going to lose your akhirah? Okay, so I think before we address this question, let's clarify that, you know, your relationship with Allah subhanahu wa ta'ala is your first priority. Okay, now the question I think you're asking, okay, how important is the wealth?
Yes.
You know, okay.
Where does it sit? Yeah.
Okay, look, we can say, okay, look, I will believe, I like, obviously we understand in our deen that a strong Muslim is better than a weak Muslim. So for a Muslim to be financially stable, I think it's very important. Okay, I think that's very important. Something that they should basically aim for. There's nothing wrong actually achieving wealth, but as long as it's through halal means. Okay. Now, what actually happens and what happens is we can break this, I think, at different levels. Okay. Yeah, sure. Financially, if someone buys a property and he makes himself financially stable for him and his family, okay, that's one level. Also, we come back now to MCCA. What are we trying to do? When MCCA is trying to also be financially stable and so forth, and why we've existed, that allows us to help other institutions in the Muslim community to be strong. Because we've given over, for example, $2.5 million worth of donations and sponsorships to so many different Islamic organizations in Australia over our 30 years. The reason why is because as Muslims, we're here to stay. And we need to support all the Muslim organizations around us to make sure that they're strong for not just our generation, but the future generations. And that's why you'll see, I think, from 2009, 2010, we've already financed over 55, different mosques or Islamic centers. That's from 2009, 2010. And so that's not even taking account a whole 34-year period. If you were to take into account easily double that number, that's over 100 Islamic mosques or Islamic centers that we've helped establish, not just that's on top of the different sponsorships and donations that we've given out, which is about $2.5 million. So I think being financially strong and stable is important in Islam.
Yeah, gotcha. No. Yes.
Yep. Also, in the Day of Judgment, we're going to be asked a question: how did you accumulate that wealth, and how did you spend it? Of course, the objective for people, it's good to have a house, even though the statistics shows that the people who didn't have a house, the time that they are in retirement, they're going to have trouble in general. So which means they didn't acquire an asset from the beginning, which means it might be an issue after that. But also it depends on the objective of the people. I know some people, for example, that they don't require even finance and they don't buy a house. But what they have done, they have a business, for example, they concentrate to put all their savings in the business. So whether commercial property or the business itself, to grow that business, then after that they buy the house. And not necessarily to buy through finance, it can be through cash where they are accumulating that wealth. So we support, so not necessarily that everyone to grow his wealth needs to go through finance. Finance, of course, one of the good means that can help people in the beginning. But there are some people who have done it successfully even without finance. So that's in general.
So coming specifically from wealth to the concept of home ownership, right? Because this is obviously a huge part of what you do, and it's going to be a bit of the discussion we have in the second half of the episode. Should home ownership be a goal for Muslims, and at what price? And you mentioned the akhirah, and so I'm glad that that's part of the conversation here. It has to be, obviously. So there's different sort of spectrums or different points in the spectrum. There are people who say rent money is dead money. Right? If you're paying rent to someone, it is absolutely washing it down the toilet. Anything is better than that, including the first home loan, with the famous fatwa of the late 90s in mind. And then there are people who say, no, living by halal and not having any shubha or doubt in your financial affairs is critical. If you're paying rent for the rest of your life, no problem, as long as it doesn't involve any sort of financial instrument or financing agreement, which may have doubt involved with it. How should Muslims navigate this issue, and how important do you feel is home ownership for the sake of establishing ourselves in this country as individuals and then as a community? Because that's the thing that plays with people's minds, right? It's like, what will I have to show for 30 or 40 years of working as a professional, and then I retire. My kids don't even have a solid real estate property or whatever to show for it. How as people who live and breathe this stuff, philosophically, how do we sort of get our heads around this issue?
Well, first of all, there is that part of education that they need to understand. I mean, if they have doubt about Islamic finance, that's halal or not. So it needs a bit more of education where the people needs to go and ask the right people, ask scholars about it. So that's number one. Number two, if anyone still, after talking to people, to shuyukh, still not convinced, that's okay. At the end of the day, you shouldn't do something that you are not 100% satisfied. Even if the whole ummah, saying it's okay, you don't feel it, keep renting. There is no issue, nothing wrong. We're not forcing the people to do it for the sake of that MCC makes money, because at the end of the day, who makes the money are the investors, not MCC itself. It's intermediary. Also, I needed just to highlight another issue where I said you accumulate wealth, so you're going to be asked on the Day of Judgment, how did you accumulate it and where you spend it? We have a misconception in the community as well, where they think they are investing the money, for example, in a halal way, when in reality, it's not. For example, the myth of, there is one brother that, for example, he trades in cars or in anything, in stock or whatever, and I'm going to give him the money and he's going to give me a fixed return. For example, 10%, let's say 12% every year, and that's fixed. So it's halal, alhamdulillah, I don't have to worry, he's taking care of it. In reality, that's riba, because that kind of transaction has nothing to do with the flexibility or variable. It's the nature. That lending So to go on the day of judgment with piety, with iman and good thing, and misunderstanding transactions is a problem. And as you know, part of our Islam, there is a small part regarding your aqidah and your prayer. You pray, you need to fast, do your zakah, go to hajj. That's ibadat. That's not muamalat. Some Muslims, they think this is Islam. It's not. There is the rest of 80% or 90% of muamalat. How am I going to deal? How am I going to buy? How am I going to deal with others? How am I going to deal with my brothers? Not only financially, but also in that muamalat, in those transactions. Part of it is the money transaction. How I'm gonna deal with others using this money, using this wealth as well, and to make sure it's halal as well.
Yeah, fascinating. But Brother Hadi, any comment on that?
Okay, well, Jazakallah khair, Brother Mohammed, he's expanded on that one. Obviously, he talked about home ownership. Like Brother Mohammed said, like if you're not comfortable with any product, don't take it. No one's forcing you to take it. Obviously, we do our due diligence, working with the local scholars, working with the international scholars. Obviously, if you do want to take the step to take the home finance, it's through our means, then yeah, we encourage it, because obviously, if you obtain, because don't forget the most important thing, just like you eat halal, you also want to acquire your property or your assets through halal means. It's not just about, I dress halal, I eat halal, then you forget about how you're obtaining your wealth. You got to do it through halal means. So if you can do it through, I will encourage it. Yes, do that, because you know what happens when if you're able to afford and to buy a property, okay, yes, you are providing that better financial stability for your family. Brother Mohammed was quoting some other statistics where it was showing that going to retirement age without a property can put you in some financial difficulties, compared to people that own a property. So if we can avoid it, it's great. And also what happens is if you're able to own that property, it helps you also generate, it helps you create generational wealth.
Yeah.
So that if you were to pass away, you have something to pass down to your children that can also help them, for their future generations too. Because don't forget, like as a Muslim community here, we're here to stay. Yeah. We're here to stay. We're not going to be going back to our parents' country. We're here to stay. We're here to establish ourselves. So let's be financially stable, okay, and ground or cement ourselves here in Australia.
So you'd encourage it, but only if people are comfortable with it, basically.
100%.
It's not a must-have and anything that it takes and so forth. Because that is an opinion that some people advocate. That it's really important. Okay, that's interesting. So let's talk about the practical challenges facing home ownership for someone in Australia. Then, what are the practical challenges if someone wants to buy a home? What would you say they are? Brother Mohammed, maybe start with you.
You want to talk practical challenges or what we find?
Well, like just the average person, yeah. Like as in, what?
Look, obviously there is a few things. Like, look, let's talk about some of the challenges we find in the industry. Maybe it still comes back from the previous question, and let's also talk about challenges today with the average person. Obviously, with the today anyone who's applying for finance. Obviously, there is the challenges where just with especially in the Sydney market is very expensive. Just coming up with that first 10% deposit is I think the biggest challenge, in reality, and also making sure that especially with the repayments being much higher than it was maybe 12 months ago, having that higher repayment and so forth, and seeing if you can actually qualify and see if we can help the clients with their objectives. We got to see what do they want, what's their requirements, and trying to match it with their objectives and with their requirements. So that is a challenging part now, and obviously people's you can say borrowing powers has reduced dramatically, because obviously with our when we do our assessments, we have to have in certain buffer rates, and with the rates going up, obviously the buffer rate increases. So maybe someone qualifying for the same amount of finance as they did 12 months ago is quite different right now. So that is some of the challenges that we're seeing with some of the clients now. But I think the major challenge is really for everybody just trying to obtain that first 10% deposit. That is I think the major challenge for everybody, just getting that that first step into the market, inshallah. That's the challenges I see. Maybe challenges we also see, and Brother Mohammed mentioned, okay, I've mentioned it too, If you're not happy with no one is forcing you to take any Islamic finance product. If you want to continue renting, rent it. We've done our due diligence and so forth. But what happens is we find a lot of challenges is also educating the Muslim community, because unfortunately there is we talked about regulation issues and so forth like that, and barriers in the beginning of this interview, this broadcast, but also there's other challenges where people will talk to us. Okay, why is MCCA dealing with non-Muslim entities? Okay, what about the source of funding?
Yep, we'll get to that.
Okay, people will also ask, okay, what's your relationship with your non-bank funders? What's going on? These are a lot of misconceptions that people have, and trying to educate people. And the challenge we have is trying to educate people. And if it's alright, maybe I can address it. Might as well while we're here. For example, people ask, okay, for example, MCCA offers 3 products. Okay, one is our Tamlik product, which is through our MCCA income fund, which is through our internal funding, which comes through our investors. We've got a range of investors that, from $1,000 to investors that put in $8 million with us. Okay, so we've got a big range of investors, from usually mum and dad investors. Yeah. Okay.
Some very rich mum and dads.
Or a lot of organizations. A lot of Islamic organizations and mosques actually invest with us. Gotcha. Just so that you know. Yeah. So that already shows, also these mosques that all have shuyukh and so forth wouldn't invest with MCCA if they were not confident with us. Sure. So that's one of our products, which is MCCA Tamlik product. Obviously, we have the other products, which is our Amlak and our Baiti product, which is where we deal with non-bank funders, okay, the non-Muslim entities. And people say, how is this halal and so forth? And then the thing we need to explain to people, in Islam, the ulama say there is nothing wrong with dealing with non-Muslims. The Rasulullah and the Sahaba used to deal with Ahl Kitab, which is the Christians and the Jews. What the ulama say is, what's important is how you transact with somebody, not who you're transacting with. Sure. And for example, just use some simple examples. If you're dealing with a non-Muslim farmer and he's selling you a box of apples, as long as you agree to that price and the transaction, there's nothing wrong buying that box of apples from a non-Muslim farmer. That transaction is halal. But let's now go to the other side. You have a brother that fasts. He prays. Okay, he does Hajj. He wants to sell you a carton of beer. Even though he's Muslim, you cannot do that transaction with him because dealing with alcohol is haram. So you see the difference? Dealing with he's a Muslim person, but we cannot do that transaction with him because the transaction itself is haram. Even though he's Muslim, but here it is a non-Muslim person, but the transaction itself is halal. And even the ulama go to the other example where the Rasulullah he obtained barley, on credit from a Jewish person. And not only did he obtain that barley from that Jewish person on credit, that Jewish person also took the Rasul's shield as security. So that also shows, the ulama said, that shows that also it allowed, that this also is an example where a non-Muslim took a security from a Muslim person. So there's nothing wrong dealing with non-Muslims as long as the transaction itself is halal.
And obviously then the question will come down to the transaction and whether the transaction is halal. We'll get to that in a second. So I guess those are some of the practical challenges, right? And I guess let's add a little bit of an Islamic flavor to that. What are the challenges to practical home ownership in Australia? And for the benefit of our audience who may not be familiar with the industry, let's just say, a bunch of Muslims landed here in 1995, let's say. Like all of us migrated together, there'd been no Muslims living here. We found ourselves in a non-Muslim society and we're trying to figure out how to buy a home. So the essential problem, of course, would be that we don't all have money lying around, so we can't just buy a home like that. We need to figure out how to bring wealth together in order to be able to get something. So what was the cooperative element of MCCA's initial earlier days? Like, what's the idea behind that? If you can explain that in very sort of simple terms.
The initial one where it used to be, they call it the Jam'iyah, which is the cooperative model, where a group of people, they come up with a small deposit together. So assume we are 5 of us, we come up with, let's say, 20,000 each. And 5 of us, now we raise 100,000, and the first person the sixth person or one of us buy a home worth 100,000. That was initially the model. So the maximum finance was 100,000 at the co-op level. then it was increased to 120, then 160. So people come together, put that 20%, and buy like a waiting list. The problem with that model was it's like what they call it a pyramid scheme, or they call it modus operandi in I think Italian language, where you're going to have an issue after a while because the first 5 buy for one of them, then you need the new 5 to buy for the second one, and the new 5 to buy for the third one. So I remember in when I joined MCCA in the even around the 2001, the total mortgages were 24 million, and we have people who are putting their money, their 20%, and the people in the waiting list were more than 16 million at that month, and the waiting list like reaching 2 years.
Right.
And by the time that it reached their term, now the properties, they're not anymore 100,000, became 150, 200.
So the cooperative concept became unsustainable practically.
100%.
And this is what I'm trying to get to, is that's the practical problem of Islamic finance. If you're gonna stick with those sorts of models, is that in fairness at the core of the musharaka mutanaqisa concept? Would you say like a cooperative type of? Or would that be a misunderstanding of it?
No. That cooperative is more like how you're going to acquire the wealth from the investor's side only.
Okay. Yeah.
Now, the finance side, the people are, it doesn't matter which model you use, whether you're getting a funder, because the beneficiaries who would like to buy a house, the best interest for them that they buy the house immediately. So they come to you and they have their deposit and they get the finance, rather than they have to wait. And during this waiting, so that's where that mix model of the Jam'iyya, where you're mixing between the best interest for the investors and the best interest for the people who are buying the houses. That was the mismatch, and that model never succeeded.
So it has its practical limits. So then what happened? And I guess what did MCCA then do in terms of offering different products which weren't necessarily grounded in the cooperative concept?
Yeah, first of all, we of course, I would like to acknowledge that the people who started at MCCA in 1989 or 88, at that time, when they started with those products, without them, MCCA didn't exist today. So regardless whether we agree on that model or not, that model was a must. And we don't regret anything that MCCA have done in the past or that it's wrong. Actually, we say the people who have done this, they have done well.
It was done at a point in time.
Otherwise, we wouldn't be here today, and we wouldn't have this organization reality. And even these products, initially when it evolved, again, even the people were paying double stamp duty in the beginning for murabaha and musharaka, and that's where in 2004 we came to come up with the solution and start looking, as I mentioned initially, regarding the murabaha. What are the issues of the murabaha? The musharaka, what our strength, what are our weaknesses. Our strength that the people are looking for to get to buy houses, to have mortgages. The demand is high, the supply of money is not there. So you need to tailor a product where it match the best interest for the people who are buying their houses, as well to retain those investors.
So on that then, let's talk about the different models in a nutshell, because as I said to you, the time flies. We're already at 50 minutes, subhanAllah. So really want to get into some of the guts of it. We're going to go a bit longer, inshallah. So there are 3 that we'll quickly talk about, and I want you to explain them as simply as possible for people, right? And I want to then sort of look at each of these from the perspective of what the criticisms are that people may have, especially that one which you were mentioning, right? Which is not that you're transacting with non-Muslim entities, but it's the type of transaction, what's happening there, right? That's the biggest criticism, especially with the Ijara Muntahiyya Tamliq sort of concept. So if either of you can just break down for us the 3 sort of names that get taken the most, which is obviously Ijara Muntahiyya Tamliq, then you've got your musharaka mutanaqisa, and then you've got your murabaha, right? Let's talk about those 3.
Can I jump in there?
Please.
All right. Okay, it's interesting. Okay, obviously those 3 products, 2 of them the musharaka and the murabaha, we used to sell it in the past. We only do the ijara product now. Maybe I'll just touch quickly on them. Okay, with the musharaka, forget the issue of the supply and the demand. That product type is different to your funding situation. Musharaka in general, if you see internationally, is not a product that's used very commonly.
Okay.
Musharaka is actually a partnership.
And it's because of the scaling problems around it, isn't it? It's that it can't be scaled.
No, it's different. It's different. Now, look, because it's a partnership, it's a sharing concept where the financial institution is sharing the ownership with the customer. So what happens is there's a lot of risk involved with that. So a lot of Islamic banks, and why it's not popular with a lot of Islamic banks overseas, is because Islamic banks find it, because it's a riskier product, they find it very hard to find funding for that product.
Okay.
And for us in the past, when we used to sell it, like Brother Najjar, he touched on it before, why we stopped selling, or the board of directors stopped actually providing this product, is because, when it comes to sharing, it means sharing profit and loss, sharing the risk, when some clients were in financial hardship situations and they showed us and they were able to evidence their hardship and they were forced to sell their properties, we shared in the loss with them. So fair is fair. It's a musharaka. And the regulations in Australia doesn't care if an entity wants to share in or loss.
Right.
But what actually happens is, under Australian regulations, it doesn't allow you to force a customer to share in the profit. So see, it doesn't work. So it doesn't work both ways. And in our history, we've only had one customer who's shared profit with us in a property for only $1,000.
Right.
And Brother Mohammed touched on this before. There was a peak, I think, in the mid 2000s from my memory, where prices were going up, and we had a large number of clients who were saying, we're refinancing to the bank. We got legal advice. We got these people refinancing to the bank. We called, we asked them, can we stop it? The lawyers were saying, no, once someone's given you a discharge of mortgage, you have to comply within 30 days. We've spoken to the clients, why are you discharging? Why are you going from a halal alternative to a non-halal alternative? And the response was, look, brother, I'm only going to be with the banks for a few months while I'm selling my property. I don't want you to share in the profit.
Right.
And we're like, okay, bro, so you're actually, so you're now got halal finance through halal means, but you don't want to go through with the full concept. So then the directors, the board of directors said, well, look, you know what, we have a responsibility towards our investors. How we use their money, we're going to be held accountable for how we use their money. So how is this fair that we've shared in losses with many clients before, but when it comes to sharing the profits, they're able to use that legal loophole, get us a discharge of mortgage, refinance the ANZ, Westpac, whoever they're dealing with, and take the whole profit. So that's one of the restrictions that's one of the reasons that's the main reason why we stopped that product. The risk, it's not fair sharing of risk. It looks like the Muslim community isn't ready for that product.
Gotcha.
Unfortunately, and it showed.
So the body, and so the point is not to, it's just to recognize realities and that they exist. So the key body that deals on that concept, we've had the brothers here before on the show, would you say that, because that's a conclusion that we reached with them, was that it's a bit of a scale problem, that it works, but it can't be scaled to hundreds of thousands or even thousands of people.
It's not a scale problem, it's a product problem. And that's why with a lot of Islamic banks, why they don't provide it, like I was mentioning before, is because they know it's a riskier product and they can't get enough funding to support that product because of the risk involved, you know.
Okay, so that's where it's going. Okay, fair enough. I mean, so
that's from our experiences, you know.
So you guys decided not to go down that side. So that's musharaka mutanaqisa, which is the shared sort of risk, sort of approach. Talk to us about murabaha a little bit. What's that all about?
Murabaha, very simple, is a very simple product. It's selling with it's selling with a markup. Okay, for example, this cup. I buy it for $1,000. I sell it to you for $2,000. Whether you pay me back in 30 years or you pay me back in 1 year, it's still the same profit.
Right.
Okay. There is some legal restrictions. We've spoken to a lot of the regulators. There is double stamp duty issue. You cannot get around the double stamp duty with Murabba. So if I buy a property now for $500,000, and then I sell it to you for $800,000. We cannot avoid this double stamp duty. There's that strict restriction. And then number two is sometimes also getting the investors also, because there's a risk that you're locking something fixed for 15 years or 30 years, okay, for the 30-year period, where a lot of things can happen during that time period. You know, how do you correctly price it, you know, to get the right investors in there? So there's sometimes, you know, there's a lot of challenges with that product we found out here, you know, to be quite upfront with you. Gotcha. The third product is the Ijara, that, you know, Ijara product that we've discussed. It's a very simple concept, and I want you to understand that this is a very common product with a lot of Islamic banks overseas. This is not something that MCCA has created out of thin air. Okay, this is a product that's commonly used, and we just brought it here to Australia, and we've catered it, and we had to customize it so it also complies with Australian regulations. Yeah. Okay, very simple. Someone comes to us to buy a property. We do the assessment, look at their objectives, their requirements, so forth. If everything looks all good, we give them a pre-approval to go out looking for a property. Yeah. When they go out there, they're acting as a wakil, an agent on behalf of MCCA, and inquiring that property. Okay, once they find that property and they come back to us, we do a further assessment. Is that property suitable? Blah, 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 blah. Is everything up to date with a pre-approval? If we go ahead with that purchase, Islamically, MCCA is considered the owner from a Sharia point of view. Okay, and we then lease that property back to the client. The client's making his lease payments over a 30-year period. When he finishes that lease, he can finish it anytime he wants. In 1 year, 2 years, he doesn't have to stay to the 30 years. Obviously, he can finish it anytime he wants. And with the last payment, we give the ownership back to the client. So during the whole transaction, we are considered the owners of the property Islamically from a Sharia concept. Okay, and then we pass the ownership back to the client.
So this is your main product that you're offering?
Yeah.
Okay. So what's the go with Murabaha? You're not offering Murabaha?
No, because the main barrier is the double stamp duty. You know, other than the exemption in Victoria, we did try to speak to the regulators in other states, and with that one, they were very strict. They said we cannot get any exemption on that product.
So let's come, and conscious of time, the criticism that is made of the Ijara Muntahib Tamlik model, or I guess of MCCA more generally, is why are my repayments changing when the RBA rate changes, right? So this is a common refrain that we hear from people. How would you answer that?
First of all, as we mentioned, the rationale that we came up with this product, initially when we had the Murabaha and the Musharaka, where it used to be fixed for 15 years. So those challenges at that time, it used to be the rate starting at 8.15 to reach to 10 for the life of the contract, not changing. So to come up with alternative where you can enjoy where the market, when the market is down, then you can enjoy a lower payment. Even though initially the people in the last, like, let's say 4 or 5 years, they were happy when the rates were going down. So nobody came and complained and say it's not Sharia compliant. But to make it in brief, for MCCA or for any bank, conventional bank, Islamic bank, or any other institution, or even non-banks, usually you are governed by the market, the general market. So if you are selling something, the market dictates this. So if you are selling meat, for example, the price is dictated by the market, not by yourself. And the same thing, petrol is dictated by the market, not yourself. You as a retailer, let's say, or a provider for that petrol, for example. So over here for banks, or Islamic banks, or financial institutions, and MCCA, you are sitting in the middle to balance between the investors, what they call them the creditors, and the beneficiaries, or the people who are taking the mortgages. Now the difference over here and the mismatch, in our case for the income fund, you're having the investors who are putting their money for 6 months, and it's at call. They can call it to redeem it in 30 days. Notice fully. And on the other side, we invested with mortgages for 30 years. So the people are paying monthly payment. Now this big mismatch, to accommodate this and to make sure that you're not having the investors running away. So what you need to do, and that's where we structure the product to be variable. So we need to have a benchmark. Kind of, we are looking to the RBA. So when the RBA increases, we go immediately and increase it on the people who are taking the mortgages. And the reason over here, even though most of the banks, they don't like it, by the way, and especially like what happened in the US, the collapse of one of the big banks over there, where initially in US, the majority of mortgages are fixed, 30-year fixed. So what happened when the Fed Reserve, they start increasing the interest rate, they couldn't retain the investors.
Correct.
So they want to pull out.
Yeah.
All of them now queuing to the bank collapsed.
Yep.
So people lost some of their money.
Yeah.
So over here in Australia, lucky we're having a floating economy in Australia, and this is the government stand as well. Everything floating. There is nothing to be kind of fixed.
Yeah.
And when the banks give fixed, usually it's a small part of their portfolio.
Yeah.
So over here, the main challenge to make sure you're balancing out the best interest of the investors and as well the people who are taking the mortgages. So our cap in reality is fixed.
Sure. Gotcha.
And the proof that when the rate goes up, our return or our profitability, taxable income for the total organization currently, every year it's not like exceeding up.
Right. Yeah. It's the same because you're
same.
just acting as the middleman. Yeah.
But the return to the investors is increasing, even though it's not increasing the same way that.
Now here's the question. So what of the likes of Latrobe Finance and so forth? What role do they play in this entire ecosystem? That's people's question. So that answer makes a lot of sense actually.
Yep.
It's to provide a return to investors that is comparable to what they would get on the market, because why would they keep their money with MCCA as opposed to putting it in some other financial institution where they can at least get the equivalent, just parking their money in a bank account somewhere, right? So that part makes a lot of sense.
But also, can I jump in if you don't mind? Because that is an important topic. Because you see, yes, you have to understand the practical realities for MCCA. We have that balancing act where we have to keep our investors happy so they don't go, so we don't lose them, and we also have to keep our mortgage holders happy so that we don't lose them.
Of course,
they
refinance
got this, and what happens is we also like, for example, see the effects from both sides. So what will happen is, yes, mortgage people have mortgage contracts contact us. They want to make sure they're on the best rate possible for their financial means, and we have the investors that also contact us too. And some investors will also, and if, for example, we had an investor a few weeks ago who's got over $1 million invested. He goes with us, he goes, oh, I want more return on my money. We tell him, brother, do you understand what that means? That means that's not possible, because for us to give you more return on your money, that means you're asking us to increase the rates further on our mortgage holders.
Yeah.
Because that's the only way we can get a return. So that's the balancing act we have. And also, when it comes to the rate being variable, I think we need to clarify something. There is OIFI, which provides the international boards for Islamic finance, and they say for all ijara contracts that the ijara contracts that you're allowed to have a floating rate. Don't call it variable rate; they call it a floating rate.
Sure.
And some of the and you can go straight to the website and you can check their standards.
Yeah.
And some of the rules is that, okay, number one, you've got to make sure that it's mention in the contract that it is a floating rate or variable rate, which we also do, and you also have to mention what the review date is, which we also mention. So from a WAFI standard, there is nothing wrong with having a variable rate, and you'll see with a lot of Islamic banks overseas too, they also have floating rates on their contracts. And actually they tie it up to LIBOR, which is the London, the London, you can say equivalent exchange rate. Exactly. And so forth,
So if it was that would make complete sense. I think it's a very, very good explanation. But so what some people then say is that isn't there some form of third-party financing involved with some of MCCAs? It's not all just income fund people. That there's not just investors, but there's also wholesale providers of finance.
They're having the same problem, so they need to retain their investors.
Got it. Okay. So they're just another investor in the mix.
They are exactly. They are again an intermediary, where they're having investors, and if they don't give a good return to the investors, which is the market rate, then they're going to.
So they're wholesale investors as opposed to finance providers.
Exactly. Otherwise, they'll collapse. The whole system.
Because what people think is that what's happening here is they're giving you money. No. You're putting a markup on top of that. They're learning it to you, and then you're on-loaning it to other people.
No. Can I clarify that? Okay. For example. Like I said, we have three products. The income fund, which is the Tamlik product. We have our Amlak product, and we have our Baiti product, which is from two non-bank funders. Okay. Now, what is our agreement with them? It's very simple. We have a mortgage management agreement with them, which allows us to create a Sharia compliant product with them, where we've been able to cater, to change the contracts, to suit our Sharia means.
Right.
Okay. Part of the so that mortgage management has agreed has allowed us to do that with them. You will see, and it also part of the agreement allows us to have the ownership of the clients, to serve the clients after settlement, so forth and so forth. But you'll see when the clients sign these agreements, this AMLAC or this Baiti product, you'll see that the finance agreement is signed directly with the funder.
Right.
Okay, so it's not that the funder is giving us money. No, the client is signing the contract directly with them, this direct client agreement with them. And then obviously what happens is we're not doing this for free. We're not a charity organization. We're a commercial organization that needs to make some money. And obviously we take a fee for that.
So what is the nature of the transaction between the third party provider and the person getting the loan in that case?
Well, obviously for the customer, when it comes, like for example with our Tamlik product, we are considered the funder. We're considered, from a Sharia point of view, the owner of the property that is leasing it back to the client.
Right.
With the AMLAC funders or with the Baiti funders, from a Sharia point of view, they are considered the owners of the property and they are leasing it back to the client.
Okay. Is there a conventional loan taking place there in the middle with either of these two products?
No, brother. Okay. Obviously, we collect the fee for introducing the client and using this product that we've created with them.
Yeah. Okay. So the agreement between neither the client or your customer and the third party provider or MCCA and the customer, neither of those would be typical interest bearing sort of relationships.
Bro, you see, for us, the transaction itself has to be halal. Okay, so for example, you cannot have the front end halal and then the back end is not halal. Okay, so the only way you can create that is where the client signs the finance agreement directly with the funder, and obviously we collect the fee for those services.
Yeah.
Can I add just another thing? You see, with currently we said we have two funders and we have the income fund. So when we say us, it's MCC. In reality, the owner is the income fund investors. So it's another funder.
Yep.
So MCC is managing with the license. Okay, with the license under MCC Asset Management. We have the FSL and the credit license to operate on this fund, which is called MCC Income Fund. So in reality, it's another funder. The only thing, the funds come from Muslims. Now, if we fail as a responsible entity, then MCCA will be replaced with another manager to manage these investments and mortgages. And the same thing with our relationship with the funders. So in reality, the contract is one contract between the funder and the client, one-to-one. With all the clients, each one-to-one. There is one agreement between us and the funders, which is a management agreement to manage these mortgages. At any time we fail or we have any issues, they have the right to fire us and bring another manager to manage these, because at the end of the day, they are the owner. There is no lending between us and it's not only MCCA, by the way. Any mortgage manager in the market, any broker, for example, and mortgage managers, they are not the owners. The owner is the real funder or the bank in some cases. So it's not MCCA. That relationship, it's only talking about that management and how we manage the client till the end of the journey, till the client finishes contract.
So you would say that the most succinct way, I guess, to sort of answer this criticism is that no, it's not a loan-bearing agreement. It's not just because some people say that sort of stuff, right? That it's just a sham. It's actually just like a typical loan agreement with MCC acting as middleman in the middle. No, there's a different type of sort of transaction happening, and it is the way that you explained there, Brother Hadi. Okay, interesting.
Even though, if you
of course, no, please.
There is nothing wrong if MCC or any financial institution approach to have a deal with a bank. So there is a myth that MCC is getting their money from a bank. It's not about bank. There is nothing wrong with it from a Sharia point of view. That myth, some people, they try to put it as a negative. Actually, we wish if some of the big four accept to give that kind of finance. Unfortunately, nobody accepted. And the reason for them, it's that risk of Islamic finance, which is a different community, different group, which can bring some others to not like that product from the conventional bank to be given. But we wish at least we can have a cheaper funding for the community. But nothing wrong.
Well, you say nothing wrong, but what would be the return for them? Like, how would you determine, would it not be an interest rate that they would be getting paid for giving you those funds?
Well, first of all, even if we come up to Sharia, as you know, there is Islamic banks and there are conventional banks having what they call Islamic window.
Yes.
So in Middle East, they exist a lot.
Yes.
Conventional
so how do they manage
banks,
that?
riba banks.
So what do they do? So let's say I'm a Commonwealth Bank, MCCA has approached me and they want wholesale funding, right? What is in it for me and how will I make a profit other than to charge interest?
Yep. First of all, from a Sharia point of view, you can structure a contract where you deal, I'm not talking about MCCA over here in this case, but you can have a structure where you deal in a conventional way. But the main thing over here, that what you are giving to the clients, where it's Sharia compliant. That's the most important one. I'm trying to add this this thing where it exists already. I'll give an example. Arab Bank in Middle East. Arab Bank is conventional bank.
Yes.
And they have a branch over here, which is conventional. In Jordan, Palestine, they also have a window. So it is okay for them, for the Arab Bank, and they have their Sharia advisors, they are signing off. But they are not signing off for the people to invest in Arab Bank and have a Sharia or halal return. Because that pool is mixed over here.
So what are they signing off on? How
they're signing on in the product where the bank giving to the people, which is Sharia compliant, whether murabaha or ijara muntahi bitamlik, or to buy cars or so on.
Well, so let's bring it back to this example that I said, right? You're a CBA and MCCA has approached you. So how would that potentially be structured in a way that you're dealing with a conventional bank, but it's still okay? How would you just play that example out for me?
Well, first of all, the bank accepts these mortgages.
Okay.
Now, internally, how they treat that profit, I mean, it's not an obligation us that we need to convince you that you need to accept that it is halal.
Of course, no, 100%. But how would it be structured is what I'm asking. So what would be the nature of the relationship there between CBA and MCCA, for example? Like what would you be paying them? What would they be receiving?
First of all, it doesn't exist. It can't
Of course, but hypothetically.
Hypothetically.
Because you said in an ideal scenario, you would have that sort of funding, right?
Yeah, to have a funder as a bank, rather than non-bank funders.
Yeah.
But if there is such a relationship, what we can do, you can Islamize it. And that Islamizing of that contract is not an issue.
Right.
Because the regulator is more concerned about the consumer.
Yes.
The normal mom and dad.
Yeah.
This commercial transaction, you can fix it with the lawyers. Right. There is no issue.
Right. So what would be done in that case? I mean, what would it look like at a high level? I know it's probably complicated, but what would that...
You can structure it on ijara again.
Right, okay.
Yep.
Okay. So
you
in
can
that
structure
case,
it in wakala. There is so many, I'm not too much in details, but there are some structures already in other banks.
Okay.
And Ayofia is one of them. Dr. Dawood Bakar with Amani, for example. And Dr. Mohammed Al-Ghari, they structure these things.
So basically what you're saying is that in that sort of scenario where, let's say you mentioned Najjar, right? So an Najjar where, of course, what you've got, so the Najjar product is coming off the income fund, right? That was the...
Yeah, that's all, yes.
So,
no, all of them, they are Ijara Mutayba Tamli.
Sure. Okay, yeah. So in that case, it would be the bank almost acting as an investor, right? They're getting a return for their investment. And on the other side, you've got mortgagees who are now being able to buy properties with that relationship. And so what you're saying is that it would not be an interest rate that they're getting back. It is a return on investment that they're getting back for investing their money.
Exactly.
Would that be right?
Yeah.
Exactly. And also what they do as well, those banks, they don't sit with these mortgages. They bundle them and what they call it in securitization, they go and sell them again.
Yes, of course. Yeah.
And the same thing in the Islamic world.
Yeah.
So Islamic banks, for example, let's say choose a country like Jordan, for example.
Yeah.
The funding that they have under that bank is not enough for the whole population.
Yeah.
So they bundle again these mortgages and sell it again, but still they're managing the client.
Yeah.
Still they're managing the thing,
Yeah.
and they are selling it.
Yeah.
And the buyer, again, it can be a non-Muslim, whether a bank, in US and anywhere in the world, and taking these returns, because at the end of the day, still they're having a return. It doesn't mean they're gonna have a loss.
Okay, interesting.
And this is one of the
I think this is the I think it really gets to the crux of it, right?
Yes.
Which is, as you said, the myth. It is the idea that if you're using an external benchmark, right,
Yep.
for the purposes of ensuring that your investor does not lose out as a result of investing that money with you versus putting it elsewhere, some people would say that is riba. It smells like riba, it sounds like riba, it's got the riba interest rate bent as a benchmark, it is therefore riba. That's what some people would say. You would say no, because if you don't benchmark this way, how are you going to get funds? How are you going to be competitive in offering an investor a return?
Exactly.
Well, let me just jump in when you're talking about benchmarking. Okay, we talked about, a lot of Islamic banks using the LIBOR system as a benchmark. Whatever you do that, for the last 20 years or so, there is no global international Islamic finance rate benchmark available. So that's why when you see some of them, because obviously when these Islamic banks overseas, when they're raising funds, they do it through sukuk, which is, Islamic mortgage bonds. And when they do it in US dollars, okay, they tie it to the pricing of the LIBOR system, because there is no Islamic finance, Islamic benchmark, which is accepted globally. So maybe it's not the best solution, but that's the only solution that they have.
And because interest rates are always the opportunity cost of what else you could do with the money, therefore, using that as to say to your investors that, look, hang on, if you put money with us, we will at least give you that much, so you're not going to lose out versus having it sitting in a bank account or something like that.
Let me talk to you about also when we talk about like the LIBOR, the benchmarking from other Islamic banks. Let's mention some names. You have one of the biggest Islamic banks in Saudi Arabia, the Islamic Development Bank, okay, which is the only Islamic bank in Saudi Arabia which is AAA rated. When they issue the US dollar sukuk, that's pricing is linked to LIBOR. Also, one of the conservative Islamic banks, also in the Middle East, is Kuwait Finance House. Also, when they issue the sukuk in US dollars, that's also priced and tied to the LIBOR rate also. So don't think this is not just something that is in Australia with MCCA or other financial institutions, Islamic institutions also here in Australia that have this issue. No, it's also internationally, globally, with a lot of Islamic banks overseas too.
Can I add just of course. We come back to the myth, whether at individual cases or at that bank-to-bank relationships. Similarity in transactions, similarity between conventional and Islamic, doesn't make it the same. It's that in document where I'll give a small example. So we have a couple who are married, they went to the sheikh, they have the two shuhud, and they signed this agreement. So this Sharia agreement or this marriage contract makes the product and the relationship to be halal. And another two people, another couple, they committed to each other, no cheating, everything, the relationship is very good, but the transaction is haram. It's that small piece of paper that makes it. And that's when the people, they come to Rasul Sallallahu Alaihi Wasallam and they say, إنما البيع مثل الربا. But what's the continuation? وأحل الله البيع وحرم الربا. So there is an acknowledgement that there is some similarity.
Yes.
So that's one of the issues that people still cannot comprehend. So I'm coming to you. It's a mortgage. It's a mortgage. There is a rate, it's a rate. There is an installment, it's an installment. It's variable, it's variable. That means you are both the same. It's not.
And that is what people say,
It's that document which is inside the Sharia side that speculate the relationship in this Ijara Tamlik that makes it the halal.
Look, we are out of time, and I'm very conscious of your time, brothers, and the time of the audience. Fascinating discussion. Very, very good. I'm glad we got to what seems to be the crux of it. Now, whether people buy that or not, and that's the great thing about this show, right? That we're having open conversations, and very keen now to see what some of the feedback will be from people in the community, and we can continue this conversation another time, or discuss it offline, and then sort of do something else after that. But really appreciate and respect the time that you've taken to explain this. And I think, look, there's a lot of people that this will fly over the heads of. I'm not even going to pretend for a second that it's not. It is a bit of a technical discussion. And for a lot of sort of brothers and sisters in the community without a bit of economics background, and obviously I've got an economics background as well, so sort of able to hold that discussion. Nonetheless, what I would say to people is, I guess, delve into the issue a little bit more. Like, the myth, as you said, that is what it is. That it smells like it quacks like a duck, it looks like a duck, it's whatever. Therefore, it is a duck. MCCA is dealing with the duck. They're just calling it something else, but it's interest, right? That's always been the accusation. And I guess from your side, what you're saying is, look, there's a bit more to it than that. The similarities are unmistakable, but they exist for a reason, and people should look into it. And I think tonight could be a good conversation starter for that. and there's many ideas that come to mind for how this issue can be engaged in the community. And look, there may be people that have strongly held views that come out and say, nope, for this and this reason, this is how it is. But at least that conversation can happen and that community discourse can continue. But really appreciate the time you've taken to explain a bit of a tricky concept. And I guess it would be amiss not to sort of maybe give it back to you for any final thoughts, any concluding thoughts that you might give to people to take away as they think about this issue.
Look, from my point of view, obviously Islamic finance is a complex issue. Always we say to the people, refer back to the specialist in this industry. There's ulama that specialize in tafsir Quran, Hadith, so forth. There's scholars that specialize in Islamic finance. We've mentioned Awafi, go to the website, look at their standards, and so forth. We have our local and our international Sharia boards. Look at their standards. We're most happy for you to look at them on our website. And don't think that these misconceptions or these issues are just only here in Australia. This also exists in Muslim countries overseas too. I met a former director of Islamic Bank of Bangladesh. He's passed away now, Allah yarhamu. But when we were talking to him about these issues, he said we have the same questions and same issues in Bangladesh itself. And he goes, and people think that the concept of Islamic finance is that it's haram to make a profit. You can't lease me the product. I can't make this and that. Where they have the same education issues. So don't think that these questions and so forth, it just exists only here in Australia. They exist overseas in our own Muslim countries also.
Brother Mohammed, yes, final thoughts?
Final one. Jazakallah khair, Brother Firaz. Also, I would like to encourage any brother who have any doubt, any question, to call us. I'm available. Brother Hadi is available as well. You can call MCCA main lines or even our directors, our Sharia advisors as well. And if there is any doubt or any concern, please contact us. And at the same time, I would like to thank you and thank NZF for this opportunity and tonight, and hopefully Laylat al-Qadr to be this night, and encourage the people to support NZF as well.
Alhamdulillah. Thank you so much, brother.
Thank
Really
you.
appreciate it.
Thank you
for doing this late in Ramadan. But as I
you.
said, I think it's a kickstart for a very good discussion. The little snippets that we take from this episode will be really, really helpful to people, and will deepen the community conversation on this issue. So I really appreciate it. Brothers and sisters, we'll leave it there, inshallah, for tonight, and we'll leave you to get on with your nights of worship. Whether you are on an odd night or an even night, still, please go hard. Don't hold back. Make dua for the ummah, make dua for us, and of course, don't forget to give as much as you can in sadaqah in these nights if you've already given your zakah. We ask Allah to give us the tawfiq as a community to move forward on these issues, to deepen our understanding, and to always be cognizant of the halal nature of our wealth, how we gain it, how we spend it, and to make us of those who are always concerned with the nature of their transactions, inshallah. Jazakumullah once again, and that will be the end of Ramadan Real Talk for 2023. We will be back with more Real Talk episodes after Ramadan. I look forward to seeing what lies in store then and connecting with you, inshallah, in a few weeks' time. Take care, and until next time, have a fantastic Eid with you and your families. سبحانك اللهم وبحمدك ونشهد أن لا إله إلا أنت أستغفرك ونتوب إليك والعصر إن الإنسان لفي خسر إلا الذين آمنوا وعملوا الصالحات وتواصوا بالحق وتواصوا بالصبر وعليكم السلام ورحمة الله وبركاته.